Kevin Green joins me now to help set up the action for the day. We'll start off with Cisco. The earnings are in higher, up by about 6% this morning. Some of your thoughts on the details.
Yeah, we actually saw a really strong report when it comes to Cisco, not only for the current quarter that they reported, but also their guidance moving forward. We actually saw revenue coming in at $13.99 billion. Street was looking for around $13.87 billion, and the adjusted earnings per share came in at 94 cents. Street was looking for 91 cents here. AI-related orders actually for the quarter increased by $350 million. That brings the year-to-date total sitting at around $700 million, and they are expecting the full year to exceed $1 billion when it comes to AI-related infrastructure business here as a whole. Now, when you're looking at their full year guidance, once again, beat the street's expectations. They're looking at the adjusted earnings per share for the full year between $3.68 to $3.74. And once again, that actually the low end of their range exceeded the street's median expectation, and revenue once again saw a meaningful increase to the upside. So they are seeing the effects and benefits of the AI frenzy, if you will, Nicole. And even though we did see the networking hardware side come in a little bit soft, that was actually offset by some of the strength that we've seen from Splunk, as well as the cybersecurity portion of their business. So overall, you're seeing a nice little rise to the upside. Cisco usually doesn't move that aggressively. The market was only pricing in around a 3% move, so exceeding the street's expectations when it comes to this price advance as well.
Look, and nice to see these levels here for Cisco, at least getting recent highs of 63, now looking at 66. So that's a big deal for the shareholders. I saw Rosenblatt has an $80 target now, and Barclays with a 61 target. Not so great. So mixed bag there. And then we'll switch gears and turn our attention over to Deere. Now, this is not a great report. Some concerns about pain ahead and sales numbers. Tell us about that story.
Yeah, they are seeing some pressure, especially when it comes to the farming equipment here. They did have net sales at $6.81 billion for the quarter. That actually missed the street's expectations of around $7.7 billion. And that's around a 35% drop on a year-over-year basis. And the adjusted earnings per share did actually exceed the street's expectations at $3.19. Street was looking for $3.11 here. But when you're looking at their full year profit forecast, that once again missed the street's expectations. They're talking about the weakness when it comes to demand. Obviously, we do know that agricultural products, especially when you're looking at the grains, the soybeans, corn, has been fairly weak over the last couple of years. And they also attribute some of the slowing in demand due to the interest rate environment. And a lot of these farmers are actually looking at renting equipment rather than buying it out just because of the excessive cost of capital in order to obtain the equipment. So unfortunately, we are seeing the shares down on the session right now, down about 5%. And Nicole, we are expecting Donald Trump to actually announce additional tariffs today as well. And John Deere, or just Deere Co, and a lot of these industrial companies, especially on the international stage, could be impacted by that as well. So there might be a continued volatility just depending on what the tariff proclamation is going to be for today as well.
Yeah, understood. All right. So all about tariffs, of course. This is our endless conversation because there really is not a lot of clarity, and that sort of jostles the market. The market doesn't like uncertainty. Let's get to PPI because yesterday we got the CPI in and showing hotter inflation, particularly for shelter, food, used cars. Those were some of the things still quite inflationary. Today's PPI print, very important. What are you watching for specifically?
Yeah, so the street's actually looking for the month-over-month headline PPI to come in at 0.3%. Last month it was sitting at 0.2%. And if you're looking at the headline year-over-year number, street's expecting around 3.2% for that to come in. If we kind of look at the last report, a lot of the pressure that we saw to the upside for PPI, especially for final demand goods, resided in energy prices going to the upside, obviously, especially when you're talking about diesel, which is more of an input cost for businesses rather than consumers. And then also transportation and logistics costs. So that'll be on the radar here today. PPI is a very volatile number and very hard to pinpoint, even harder than CPI. And if the trends that we have seen when it comes to the energy markets are translated to PPI, this one could also come in fairly hot. The market might be already pricing that in, Nicole. So I'm not sure how high the bar is going to be. But once again, I mean, if you kind of look at some of the trends in CPI and if they do stick for PPI, then that could be a little bit of an issue. but PPI usually leads CPI by about 1 month to 2 months. So if we do see PPI coming in lower than the street's expectations, that might give us some confidence that maybe this print that we had in January was an outlier, which we generally do see hot prints in January when it comes to CPI.
Yeah, and that's a great point. I was going to make that point. I'm glad you mentioned that because, sometimes January can be somewhat volatile. There is some concern and conversation now about stagflation, right? Where you still have an inflationary environment, high unemployment, low growth. That seems to be something people are talking about. And in fact, Goldman Sachs, I was reading that the tactical strategist there was saying, this is going to be my last bullish email of this first quarter of 2025. So just sort of making the case for some of the reasons why things may slow down. It could be as simple as even 401k and 529 inflows, that those slow down after February. He gave a few examples. So what else are you watching for?
Also, once again, I mean, we have a lot of news that's going to be hitting the wire today as well. We have initial claims. So the expectation there is going to be 217,000 for the week. And we have been, for the most part, pretty steady at around that 215 to 220,000 level. So anything that's hotter than that, that might cause a little bit of volatility here. But I think the markets are probably going to wait until this tariff announcement's going to be made. Donald Trump did post that this is the big one that's going to be coming out. And if it's actually lower than the street's expectations, which the street is looking for pretty much across the board on average around 10% tariffs. If it comes in a little bit lighter than that, that actually might be a little bit bullish for the market. So I think we're going to be kind of focused on that, and then looking what the new narrative is going to be. We have seen a nice little bounce back yesterday when you're looking at the losses that we saw early on in the session, but you're not really seeing a broadening out of this rally. And it looks like we really do need a new narrative in order to try to get us to new all-time highs and continue to move upward. So I'm looking for volatility, Nicole, in the market here today.
And the rhetoric even seems somewhat uncertain. Yesterday we were talking about maybe weekly losses again, and now I'm looking and I see S&P and NASDAQ are up for the week. So we have to wait and see, I guess, as we get more information. And as you noted, Kevin Green, good to see you. Thank you so very much.